With a higher margin, mainly due to the lower steel prices and higher execution in US, and an overall favorable oil and gas capex environment is what driving the large diameter pipe manufacturers give a robust guidance for FY24. To understand this number calculation, I am Priyanka Uppal here in Anjar in Gujarat to understand what is the strategy ahead for Welspun Corp. And joining me this exclusive conversation is Mr. Vipul Mathur, MD and CEO, Welspun Corp. Mr. Mathur, very warm welcome. Thank you so much for giving us time.
Welcome and a good day to you.
Thank you so much. I wanted to understand, Mr. Mathur, that you've given a guidance of, and we've seen your numbers last year also, the guidance that you have given for this year, FY24, is 50% revenue growth, 90% EBITDA margin growth. Where is this confidence coming from?
So we have to understand that this industry, the oil and gas industry, is undergoing a sort of a tailwind at this point in time. We were all thinking that around the pandemic time, that fossil fuels are history, oil and gas has no future, renewable is going to be the only way moving forward. But I think so there was a harsh reality check which came in, which very clearly said that oil and gas is going to be there for a sustainable time. Of course, while renewable will take over at some point in time, but I think so that's quite a bit of a distance. So all that projects which had gone on the shelf, they were not on there.
Sure.
They started coming back on the table, right? So today, quite a few companies or quite a few countries, let me put it this way, are seeing this as an economic opportunity, and a lot of countries are seeing this as an energy security. I think this got compounded by this European war, the Ukrainian war,
Sure.
where every country wanted to have their own energy security, right? Because suddenly the gas coming from Russia to Europe stopped, and the Europe came to almost a standstill. So every country started thinking that, no, I need to create my energy security. So all the projects which were on, which were put on a hold, everyone started accelerating that whole process. And now we are seeing that traction coming back on the table. And I think so that gives us the confidence that, there would be, all the countries in the world, especially, the Middle East, the Southeast Asia regions and all those countries will aggressively play a role in terms of developing.
And that's why we're seeing a higher execution also, especially from regions like US. So since you mentioned Middle East and Saudi, and which is a good market share for you, nearly 25% of your market share comes from that region, and we've seen a very robust capex cycle from that area. What is the visibility that you see from that particular area?
For the last 3 years, we have been extremely busy with on the water side of it. And water is, you must understand, water is even more expensive than oil there.
Yes.
Right? So it's a very, very expensive commodity, and they play a lot.
Water is the oil for them.
Water is oil for them. They pay a lot of emphasis on that. Yes. And we have to understand the genesis of water. They have seawater, which they need to desalinate. And that desalinated water need to travel to their habitation, which is 1,000 miles away. So they require huge pipelines, large diameter pipelines, long distance pipelines to service those requirements, to bring that water, the desalinated water, to the people. So that has been our mainstay for the last 3 years.
So can we say that you see good order visibility for next 3 to 4 years, especially from this particular area only?
So now the profile has shifted. Now we are seeing Aramco has come back into the market after their IPO, and suddenly they are seeing an opportunity that they can supply a lot of oil to the international market, right? As I said, economic opportunity versus energy security. So they are seeing an economic opportunity in terms of selling oil into the international market. There are two reasons for that. Number one, the oil demand is very, very strong. The demand has not gone down. It has actually gone back to the pre-pandemic level. The pricing, if you see, is very range bound. The prices of the oil are maintaining between $75 to $90. So this means a lot of mullah, a lot of money upon the table.
Okay.
Right? So they are seeing as an energy, economic security, economic prosperity around that. So I think so the way they are, the way Saudi Aramco and the way SWCC, both oil and gas and water, the way they are projecting themselves, they have planned a huge capex at this point in time, both of them. And being a very regulated market and mature market, they pace those capex.
Sure.
Right? So that gives us a very clear feeling that the visibility in the Saudi market is at least for next 5 to 7 years.
When we talk about energy, the another space, which is of course the natural gas, and we know that the entire energy mix, which government is also aiming, is to increase the share of natural gas, which is nearly 6% now in the entire energy mix, to 15% by 2030. So do you see good opportunities from that segment as well?
Huge opportunity. Okay. Let's understand the green energy.
Sure.
the investment what government what is doing in terms of creating that infrastructure network, cleaner fuel basically is the theme behind it, and availability of natural gas is now, is growing.
Mr. Mathur, what we saw was that there was hardly any major debt on you. And in fact, now also, if you see this, it's a low capex cycle phase which you're going on, only the maintenance capex which is there. So can we assume that maybe another coming 2-3 years, you can be net debt positive also?
I think so. We will be generating sufficient cash flow. It gives us a very reasonable, it gives us a feeling that we should be able to retire our net debt, or we should be net cash, maybe by the end of this year, or maybe the first quarter of the very next year.
Wow.